Over the past few years, we have all seen how extreme weather events can have a devastating impact on people's lives and their property. Insurance rates have steadily risen in some markets as risks of wildfires, hurricanes, and floods have increased. And this begs the question, are homeowners and investors starting to integrate this risk into their real estate decision making? We're going to break it all down for you right now on UBS Trending. Hi again, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thank you for being with us today. Amantia Muhedini is back in the studio with me. She, of course, is the Sustainable and Impact Investing Strategist with the Chief Investment Office. Amantia, lovely to see you.
It's great to be here again, Anthony.
This is not an easy topic to talk about, especially for those people who have been affected by storms, and it happens all over. I mean, we've had storms here in New York like Sandy many years ago, and we've had just recent storms that affected a lot of the Southeast, including Hurricane Milton and Helene. So first and foremost, you have to acknowledge the impact that this has had on people's lives. Literally, people have lost their lives in these storms, and in addition to that, many people have lost property, valuables, even those mementos, photo books, things that are, don't have a value in money, but they have a value in their, emotional state. So acknowledging that, I think what we need to talk about then is the fact that there has been this increase or it's seemingly an increase in extreme weather. So when you think about the recent storms, how should we be thinking about them, especially from that sustainable investing lens that you're writing about and doing research on?
Yeah, of course. Thanks, Anthony. And look, there's two ways in which this conversation is a challenging one to have today. One is what you're describing, really the human aspect. I mean, we look at data points, but when you're talking about something like a hurricane, an extreme weather event, even when we talked about pandemics not so long ago.
That's right.
it was about human impact. So acknowledging that's a challenge. A second challenge is that here for once, I think, or one of many times, I'm coming with perhaps more questions than answers to you. But we thought it was important from an investment perspective to lay out a conversation and articulate what are these questions around climate, weather, and real estate. So to get to the data, I mean, what we saw just a couple of months ago, which is crazy, a lot has happened here in the U.S. in the last couple of months, was hurricanes Helene and Milton, which hit the southeastern part of the United States, as well as Florida, respectively in September and October. These were $50 billion storms. The numbers are not accurate, so this is very much an estimate that is reported in the media, but it will likely end up being around that ballpark in terms of damages. Moody's estimates that the insurable part of that kind of damage across these two storms will be kind of coming with a bill of around $34 billion. That's significant. That insurance providers will have to and will be able to cover, which that by itself should be hopefully good news to those who do have coverage.
Right.
Now, what's interesting is these are not just two data points, like two storms. I think people who follow the news, open their kind of daily news or weather app, know that we see more of these kind of events. And what we're seeing also is an increased impact. So they're becoming more severe and more frequent. The chart is a chart from the NOAA, which is a government agency that tracks the number of storms that cost more than $1 billion every year. So $1 billion or more, this is inflation adjusted as a number. And what you see in the trend of the chart is that since the 1980s, both the cumulative total cost has increased and the sheer number of storms which cost the United States more than $1 billion has increased.
Right.
And so that is in some ways like the chart that is everywhere in the conversation, and it's the kind of black on white data of why these questions around climate are starting to have an economic impact.
Yeah, and there are certain parts of this country, I won't go into specific cities or towns, where it's really difficult to get insurance in the first place because of how many times a potential area has been hit by subsequent and consecutive storms. Even if you look at the west coast of Florida, 2 years ago there was a major hurricane, and some of the people who were just in the process of rebuilding or maybe had just rebuilt their homes got hit with Milton or Helene again. So it's devastating to see the impact it's had. And then when you look at those sheer numbers in that chart, it really does paint a picture from a data perspective about the increase in the cost of these storms, the impact they're having. They're bigger, they're stronger. I was in Florida when Hurricane Milton hit. Unfortunately, I was stuck there. I couldn't get out. But it was a Category 5 storm when it was churning in the Gulf of Mexico. It was a massive storm, and there was some impact there. So I want to just kind of maybe, and by the way, I also wanted to point out to our viewers that we're not just only talking about residential, there's a commercial real estate impact here too. They're in the same areas.
Yeah, absolutely.
Right.
And really we focus this conversation on residential and really almost kind of asking what are individual home buyers thinking through, but you're right, this goes to kind of institutional, those who own institutional assets, right, corporates, but also from the kind of investment in commercial real estate perspective.
Right.
Right.
So, the chart that we were just looking at, it kind of does show, the cost, as you said, at least $1 billion. How do we really break down this data? Is there anything from your analysis that you can glean from? Where do we go from here?
Yeah, so I'd say one of the ways in which this chart is both widely used and widely debated, and a question that we've received is asking, is it really that sort of more storms are happening, or is it that the value of the property that is being hit by storms is just higher? And I haven't seen any sort of specific paper that disentangles that. I think it's very challenging analytically to disentangle that. Even if there's correlation that we're looking at, I think we have to recognize that that while we have more severe storms, maybe the way that the wealth and construction has moved around in the US overlaps with those areas where you have kind of more hurricanes, wildfire, flooding risk, and so forth. And so even if you look at it not as a causal but as a correlation, the end of the matter is that these storms are creating huge economic impact. And so the question is, how is this coming into play in investment decisions? Is it being considered? As well as in consumer decisions, right, from that home buyer perspective.
Right. And that really is an interesting point because, we have seen record house, values, or I should say record amounts or record rise in home values over, the last decade, 2 decades. But we are seeing that people are starting to get the signs. One of our producers here that works in the studio with us, her mom lives in Gulfport on the west coast of Florida, got hit 2 years ago, did a little rebuilding, got hit again, and now has decided to not stay in that area because it's too risky, or at least in her opinion it is. So are you seeing an impact when it comes to folks and their real estate decisions? Or, how is that impacting whether it's home buying in these areas that have become more prone to these storms, even in California where the wildfires are more common out on the West Coast? We had seen a shift. What are you seeing when it comes to real estate?
Yeah, it's tough. I'd say we have very extremely preliminary thoughts here, and the reason for that is that this is incredibly complex, right? People have so many things that they're weighing when they make these decisions on where they want to live, from schools to taxes to quality of the neighborhood, walkability, and so climate risk is one of those areas. What we're seeing on the chart now is we looked at Census Bureau data of the number of kind of the growth rate of new home built in the last 3 years across states and by states. And we overlaid that by the cost from floods in the last 3 years. And you see the chart, there's no clear trend. So on the far right of the chart, there's a few states, you have Texas and Florida among them, where you both have a high cost and more new construction. Now, those two things, again, we're not implying causation here, but it's an interesting thing to observe. If you look at a different data set around population moves, again, populations are increasing in some of these states that are at higher risk.
Right.
So that, for us, will be an interesting area of exploration and worth noting. I'll note a couple things, though, in which how maybe some non-individual home buyer actors are thinking. We have seen 3 major kind of national insurance players exit from the kind of property risk insurance market in California and in Florida, citing the increased climate risk. Now, from that insurer perspective, it's a question of they need to be compensated, right? Their premiums really need to go up for them to take on this risk, for them to have the appetite for it.
Right.
And the regulators in those states are coming in with legislation that's saying, no, you cannot charge premiums beyond a certain structure or a certain number to preserve affordability. And so what you have is insurers pulling out, and the state comes in as kind of a backer of last resort. So the shift of risk from this climate devastation is almost then split between the public, literally the state, public money, or the individual homeowners who maybe have a challenge with getting a new rate that they can actually afford. So it exacerbates potentially the affordability problem that we have. That's one thing.
Right.
And then a second thing that is worth noting is really just green shoots, inklings. You're just starting to see some of this data around physical risk. So what parts of the country have a higher probability of being impacted in this way, floods, wildfires, etc., becoming publicly available, one, and two, becoming used into modeling. So Fannie Mae and Freddie Mac, which are national kind of important agents in this kind of home mortgage liquidity market, have noted publicly that they're using this data in their modeling. We don't know what impact it will have in their pricing, but it's starting, which makes us interested in the topic, and we think there will be a lot more to come here.
Yeah, and you really made a really good point a couple minutes ago, saying that it is a very complex issue where people decide they want to or need to or have to live, and so there's a lot more that goes into it than just thinking about what your insurance premiums might be or the risk of a flood or a wildfire or an earthquake or some natural kind of disaster. So there's a lot here, and then obviously the human side of the story is even more complex.
Yeah, and which is why sustainable investing is so complex, right?
That's
Because
right.
I'd love to say, oh, this is priced in or it's not, and there's a risk, and so you should look at that asset value drop, but it's all of these other factors which come into play.
Right. Thank you, Monty. A continuing story, clearly, as we are, and by the way, as we're sitting here, there's Hurricane Rafael. It doesn't look like it's going to affect the U.S., but it's going over Cuba and into Mexico. So there's, every time you open up your weather app, there's some storm that's brewing or potentially could be a massive issue for wherever it's hitting.
And I'll say we focus this in the U.S. as purely a case study. I mean, emerging markets are being hit significantly from these storms, including droughts, actually, so the inverse. In Spain, we had catastrophic flooding just over the course of this month. So this is a global question from an impact. The way that it will be priced in or not will be very local because of all of this complexity, which makes it hard for us as investors, but this is why we're here to kind of do this work and inch it forward.
Good stuff, and it's all in the latest Sustainable Investing Perspectives piece, which it can be found, which I'll tell our viewers in just a moment where to get that. But thanks for having the time to come and sit with me today.
Of course, very happy to come.
Thanks, Amantia. Amantia Muhadini from the Chief Investment Office. As I was saying, visit our Insights website, ubs.com/views, for the latest Sustainable Investing Perspectives piece, plus lots of other content coming out of our Chief Investment Office. Plus, you can follow UBS on social media. We're on all the major channels, including Instagram. Follow us at UBS Trending. Lots of studios content right there. And as always, if you have any questions or want to talk about this some more, make sure you're connecting with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon.